If you are thinking about buying a home here in Austin, Texas in 2026, you've probably asked yourself these two questions. Should I buy now or should I wait longer because maybe there's going to be another recession coming or crash in the market and I could get a better deal if I wait just a little bit longer? In this video, I'm going to break down what the data is already showing us about the market here in Austin, Texas, and I'm going to share what my general predictions are for what we'll expect here in 2026 for the Austin market. Hi, my name is Brigid Schlegel. I am your Austin, Texas real estate agent. I specialize with new construction homes, first-time home buyers, and relocators to the Austin market. I've also done a ton of investor deals as well. So if you're looking to do a rental property, I can also help with that. Even if you're not looking to move for another 6 to 12 months, I highly recommend getting started on your plan now. You can book a call with me down below. We'll have a private consultation and get started on your custom plan and strategy for what moves make sense for you and the changing market here in Austin. First off, let's tackle the big question. Is Austin going to see a huge crash or recession in 2026? In my opinion, the market's not going to crash in the same way that people make it sound like it is on social media and TikTok and all that. What I do think we're seeing is a slower reset. Essentially, there's slower demand, more options on the market, and sellers are starting to actually have to compete again in order to get their homes sold. Redfin has supported this outlook through their 2026 predictions as well. Essentially, the markets seem to be cooling off after the post-pandemic surges that we have been seeing since 2020. Austin is just a prime example of this. We had so much migration in the earlier 2020 to 2022 years that now it just seems to be leveling off and being more stabilized, but some people interpret that as a downturn or a market crash. In reality, it's not a huge downturn. It was just always inflated to begin with. So right now, this reset is really just a stabilization of Austin's market as a whole. There's two sides of every market. There's the buyer's side and the seller's side. And really, when we're talking about what's a good market and what's a bad market, usually one side is winning and the other side is losing. When a market can feel bad, that doesn't necessarily mean that it's unhealthy. It might just mean that it's a bad time to buy or it's a bad time to sell. Right now, we're just not in that 2021 frenzy anymore where listings were getting 20 plus offers in the first couple of days and they were selling way above their list price. In a more balanced market like what we're seeing today, where the monthly inventory is between 4.5 to 6.5 months of inventory, homes are not supposed to be selling instantly with 20 plus offers. They realistically start selling when they are priced appropriately and are marketed to the correct audience. In contrast to the recent years, it just feels very drastically slow in comparison, which I would agree. There are some parts of town that entirely are overbuilt and have a lot more new construction homes, and they do have buyers moving to that area. So appreciation rates are honestly dropping for the short term, and we really won't see those areas appreciate for many years until they get a lot more built out and stabilized as submarkets as well. But let's look at some of the data here for the Austin market in particular. Our median home sale price in November was $430,000, which is down slightly from previous months. We've also had only 1,895 closed sales, which is 15.9% down from previous months as well. This part is common when we're looking at the end of the year and holidays, November, December. The market naturally starts to cool off during this season because a lot of homeowners don't want to do showings during the holidays, or they have a lot of travel plans, and listings fall off the market during this time and end up back on the market in January or early spring instead. We're also seeing 6.3 months of inventory throughout Austin. And again, this snapshot is covering all of Austin, including Round Rock on the north side and San Marcos, which is in Hays County down below. So it's really stretching a little bit broader than just Travis County in this snapshot. Average days on market hit 79 days, which is slightly higher than before. And again, to me, that indicates a lot of leverage for buyers who can start negotiating better terms when these days on market gets higher. And the average close to list price is 91.7%, which is slightly below where it was in November this time last year. What this is indicating is that homes are not selling at list price or above list price. They are selling below list price. There's a lot more room to negotiate. Either they're reducing their price from their original listing price, or buyers are just coming in with below list price offers. So ultimately, the story is still pretty clear. We have more supply, slower demand, and buyers are being more picky and negotiating more before they make a decision. What I see here throughout Austin is that resale homes that are anywhere close to newer construction areas definitely have the hardest time reselling, because buyers that are seeing their home are oftentimes also touring the model homes and inventory homes with the builders, which have really aggressive incentives that make the deal a lot more attractive. Plus, it's a brand new home with great warranties. Hello. So those resale homeowners oftentimes end up reducing their price a lot more, or have to sit on the market a lot longer to find that right buyer. Now let's take a look at Williamson County, which is right above Travis County on the north side. Our median sale price out here in November was $415,000, which is slightly down from prior months. There were only 661 closed sales, which is still a lot considering Williamson County is a growing part of town. It is still a lot smaller than Austin as a whole. Now, Williamson County is still only 4.5 months of inventory, which means that it is a little bit more of a balanced market out in Williamson County than it is in Austin. I have a lot of relocators who want to move to the Austin area, but actually end up buying a home out in Williamson County instead of Travis County, because there is so many great options out there in new master plan communities, good school districts, and beautiful hill country views, especially on the west side. Average days on market are around 81 days, which is also still on the higher end for Williamson County. And the average close to list price is also slightly down from last year at 91.7%. So the big question, should you buy in 2026 or should you wait longer? My honest take is that waiting for the dramatic deal season is never a good strategy in real estate. Timing the market in the first place is nearly impossible, let alone rates hitting the low fives or high fours is also not very realistic in my opinion. What's more likely is that prices are going to continue to be kind of choppy. Austin is very pocketed. There's a lot of neighborhoods that have fallen flat, while other neighborhoods that have desirable school zones still have increased demand. I think sellers ultimately are going to get more negotiable as they start to come out of this fog of believing they're still in 2021 years and that they're going to get multiple offers on their home. So these sellers might start to offer a little bit more on credits or be a lot more flexible when it comes to getting repairs done before move-in. I think builders are going to continue to be very, very competitive also with their incentives. I think ultimately good homes are still going to sell. It's just going to matter a lot on the listing agents to position that home in front of the right audience, and also to make sure it stands out from all of the other homes that are out there on the market. In January, I'm expecting to see a lot more rental and resale listings hit the market. And really, this is just going to increase choice for buyers and a lot more negotiation power. Think about things this way. You shouldn't wait to buy, you should buy and then wait. The reason I say it that way is because the best strategy to beat market volatility is the buy and hold game. Rather than trying to time the market, if you just buy and hold, you will almost always come out on top in the long run as the market self-corrects over time. If you are in a position to relocate to Austin market, or you're just a first-time home buyer in the area, the question I want you to ask yourself is, are you buying because you want to time the market to get a good deal, or do you want stability and a home base that can build you equity over the long run? The home that you buy now can someday become the down payment for your dream home or your forever home. I think really for most buyers, getting into a home that has a reasonable payment is the biggest deal breaker, because you don't want to feel like you're entirely house rich but cash poor. So with that, let's take a look at the rental data too. The median rent in Austin was $2,100 in November, which is slightly down from prior months, and Williamson County was $2,000 as a median rent, which is also 4.5% down from previous months. Active leases went up in both Austin and Williamson County, while closed leases went down. So what does this mean? November is not a high traffic time of the year to see people moving to Austin or moving around within leases, but with rent prices also seeing a decline, which I've seen as a sliding slope over the whole year of 2025, this is indicating a lot more competition on the rental market, usually from new apartment supply and landlords that are struggling to fill their current units. This actually still impacts the buyer market because as renters, they are the typical first-time home buyers that we see entering into the market, but if their rent amount is still manageable or decreasing, there's a lot less urgency for them to switch from a rental agreement into a new home purchase. But I think rental rates here were also fairly inflated as they increased significantly also during the COVID years. So I believe it's really just a reset and stabilization in the Austin market as a whole. Considering our median rent is in the low 2000s to begin with, I think Austin is still a great market to move to and rent for a year or two before you even decide to buy, because this is a fantastic city to be a part of, and even living in the suburbs outside of downtown, you still have great access to do so much fun stuff here. And low 2000s as a median rent is still way, way better than what you can find in some of the major US cities like LA, San Francisco, or New York. Now with mortgage rates, I also have a similar opinion when it comes to this market reset. I don't see mortgage rates dropping super significantly, but I'd love to see them in the lower 6s or upper 5s. I really don't think we're going to see a massive flood of buyers to the market unless we are comfortably below the 6% range, either in the mid to lower 5s. Rocket Mortgage also supports this outlook by kind of giving an overview that they're expecting rates to hover in the low 6s, but ultimately depending on inflation changes and Fed moves. But keep in mind, here in Austin, I work with builders all the time who are offering fantastic incentives, either 2-1 buy downs, 3-1 buy downs, or just seller incentives to help you buy down your own rate with the lender. In 2025, I didn't close a single transaction where the buyer had to pay market rates. Now that's pretty fantastic. Even in situations where the buyer had to work on improving their credit a little bit, we still managed to get them below market rates in every single case of this year. That could be you too. We don't have to be waiting for a huge market change and shift where prices drop and rates drop, because if we do end up waiting for that to happen, what we'll see is ultimately just an increase of prices and an increase of competition, because then there really will be a flood of buyers back to the market and you will have to deal with multiple offers. Right now, we have the negotiation power to get you a deal that buys down the rate for you and you don't have to wait for that to happen in the market. I think 2026 is going to be the year for buyers who are interested in new construction here in Austin, Texas, or Williamson County, and who want less competition. They want to take their time a little bit more and really feel confident in their decision before pulling the trigger. And this is going to be a great time for first-time buyers to really start exploring the market with having that urgent pressure of putting in a high offer and putting it in super quickly in order to not lose out on their particular deal. So if you are a buyer in 2026, this is a good sweet spot and a gradual reset, in my opinion. So if you're considering buying in 2026, especially potentially buying a new construction home, I'd love to help you compare the different incentives out there, talk through the different neighborhoods, and build a plan around your set income, lifestyle goals, and particular timeline. You can book a private consultation with me down below. I'll put the link in the description. Hopefully this video was helpful for you. If so, please leave a comment down in the description below to let me know what you think is going to happen in the market for 2026 here in Austin, Texas. Make sure you like and subscribe. It really helps me out a ton, and I really appreciate it when you do. My channel is all about helping first-time home buyers or relocators to the Austin market learn all about Austin and the opportunities that we have for you depending on the current market landscape. Thanks so much. I will see you in the next one.